name is Sam Hill. I am the founder of Ecom CFO, and today we're talking about e-commerce accounting basics and unit economics. But before we really dive in, there are two general principles that are really important to understand. Number one, take ownership and responsibility for your numbers. You will own them or they will truly own you. And number two, the complexity of the finance and accounting department, and I put department in quotes because it could just be a one-person department, should align with the complexity of the business. If you're selling $25,000, $50,000, $100,000 of product a year, most likely you don't need a four-person accounting and finance department. You can probably still run that business with a Google Sheet and back of an envelope. But as you start selling 20 SKUs, 100 SKUs on multiple channels, you need to really focus on finance and accounting and make sure that it's keeping up with the complexity of your business. So why accounting matters? And let me get my head out of the way. Clean, accurate, and complete books is the foundation of a great business. And it has some really important unlocks. Actionable decisions to achieve scale, which should be pretty obvious. Number two, faster decisions to achieve scale. If you're not closing the books for 3 months, then there's no way that I can make a good decision with 3-month-old data. Number three, cheaper financing. And number four, faster due diligence and a greater percentage success of a future sale. So if I'm handing over the books to a person that's going to buy my business and it's a disaster, my percentage success rate of being able to sell my business is probably pretty low. Okay, let's talk about unit economics basics. I think most owners know the basic unit economics of their business from their website and they have it in their head, but fewer have devoted real time to define them in their financials. And as an owner, you want to make sure that you are defining, understanding, and monitoring all of these different key metrics. So for example, walking through this, we've got gross sales at the top. And again, what does gross sales mean? Is that just the product times the product price? Does it include shipping? Does it include discounts? So often I see all of this grouped into just one row and not separated by all of these key items. But in general, you want to back out refunds and returns. You want to back out discounts. You want to add the shipping that you're charging to the customer, and that gets you to net sales / net revenue. Those terms are synonymous. Then we've got COGS. We could have a 4-hour discussion on COGS, but generally speaking, you've got the cost of the product, and then you've got the customer shipping COGS, which is coming from FedEx, USPS, or whatever shipping provider you're using. But it's really important to separate those two because this shipping minus this shipping is going to tell you whether or not you're recovering all of those shipping expenses. Then we get down to gross margin and gross margin percentage, which again, everyone is pretty familiar with. But in the next slide, we'll talk about how to make this a little bit more complex. Then I think this is the most underrated, underappreciated section in all of e-commerce, but it's all of the variable costs. So my pick and pack costs, my seller fees and commissions, my merchant fees, and my ad spend. Again, ad spend is another topic we could have a whole day's discussion on, but we think about this as just the ads themselves, no agency retainer or any other cost, just the pure ad spend. And that gets you to contribution margin. And out of contribution margin, I take out all of my general and administrative expenses and I get to net income percentage. So as I mentioned, to make this more complex, we want to separate these by sales channel or geography or customer type or whatever makes the most sense for your business. And the most common ones that we see are by Shopify, Amazon, if you have some wholesale customers. or you could also separate by product categories, and I'll show a couple examples of those in the next slides. You can separate the ads by marketing channel, so I have Facebook, Google, Amazon, and whatever other platforms you're advertising on. You can separate the seller fees and commissions by channel, so just the Shopify fees or just the Amazon fees. And then, but again, we want to balance the administrative cost with the benefit of the insight. So if I have 100 rows in my accounting software, that's probably a little too complex, but I want to make sure, again, that I understand everything that is on the books. An aside on contribution margin, as I mentioned, I think it is the most underused, underdiscussed, and misunderstood metric in all of e-commerce. I wish I had more time to talk about it. I would highly recommend you look it up and do some reading on it. But what you really need to know is making sure that you define the categories for your business, separating those expenses by channel so you can actually calculate contribution margin and include in all of your future projections. Okay, so I want to just provide a couple of real world examples. So for this particular company, they are just selling on Shopify. And here we've broken down their income by product type. So here are all their wonderful product types. You can see the shipping, discounts, refunds, and returns that we mentioned earlier, and that gets them to net sales and revenue. And we've also separated all of the COGS by product type as well. So it's very easy for them to understand the gross profit and gross margin by product type from their financials, and they don't have to use another app or software to do it. Here's the COGS customer shipping row that I mentioned earlier, and then this gets them down to gross profit or gross margin. Now in the next example, it's a little bit more complex, but they're selling on two channels, Shopify and Amazon, and it's the same approach here, just again separating it by channel, and then we get down to net sales revenue here, and then we've got the Shopify COGS and the Amazon COGS, and then again we're down to gross profit and gross margin here. Lastly, I want to again talk about contribution margin, give you a couple examples here. So in this example, again, this business is selling on Shopify and Amazon, and we've got all of the Shopify variable expenses grouped by channel, and also the Amazon expenses grouped by channel. So this is the pick and pack costs, the merchant fees, and any sort of payment processing fees. Similar on Amazon. And then we've separated the advertising by marketing channel. So Amazon spend, Facebook, Google, and other. But again, you want to make this work for your business. And I hope this has really helped you demystify a little bit of common misconceptions in accounting and helped you, give you some tools and tips to own your numbers. Thank you.